Hello guys, glad to have you on board again today. We'll try and make a quicker one because there's not that much to talk about. We're straight into the mid-August kind of trading, which is the most boring ever. And at that point, everything that is in front of us is just nonsense. It's just pure algorithmic trading from the market makers facing the retail traders' volume, which is tiny, which means the market is moving because of how you do trade, which means someone else is trading against you, had better information than you do, which means odds for you to make a profit out there are really narrowing, which means if you want to trade right now, you have only two choices. First of all, you just put a very large stop loss to make sure you're not going to be chased out by an algorithm, or option number two, you just don't trade and enjoy some time with your friends and family instead of sticking in front of a computer. It also works pretty damn well regarding the cryptocurrency sector as well. We're right into August. Generally, this can be a volatile market, and for now, it isn't the case, at least not regarding the Bitcoin itself. It's been spending the latest 2 weeks in a very narrow range, slightly ticking to the upside, as you can see right now, but really is not that big of a deal. And if we have a look at the weekly chart time frame, if we do manage to make the candle close like that, probably next week has two options. Either we stay in between that support and resistance and we're just gonna die in here for an additional couple weeks or more. Option number two, this is considered to be a bearish signal and we'll have to go lower than expected. So at the current time, the volume is not that big. Yesterday we had a pretty interesting volume to the downside, so it's just really we try to go up, we try to go down, failed it, try to go up, failed it. So we got both bullish and bearish demand on a very narrow price action, which means those who are making some kind of bets in here of knowing where we're about to go are just basically playing 50-50 strings. It's just that to me, if I had to put a tiny little advance into one of the two bets on that balance, would be to the downside, simply because we're still, as long as it hasn't been proven wrong, in a crashing market pattern, which means the only option that will release that option to me is the fact that we will be into the desert crossing phase, which means we'll just stay there and not necessarily make a bullish volatile movement. So those who think we're going to go high just to wreck the sellers or things like that, this might be what we've been doing yesterday, which is trying to wreck users to the upside, which is done, and there's no one to buy after this, and basically we're just still in the range. So it's volatile moves, not necessarily followed through by the investors, which means it has no meaning, it has no sense. So the more you're trying to trade a market that has no sense, the easier it is for market robots to just take the money out of you. And moreover, if you're using trading with leverage and anything that will narrow the stop loss pricings. So the only rational thing to do right now, as I said, is clearly not doing anything or doing it with low leverage and doubling the stop loss sizing to make sure that you're out of reaching a reachable area for automated strategy that will just basically see you as fishes in the sea that will be pretty damn easy to catch up with. So now, that being said, I'm not going to say a little bit more because it really is talking about Bitcoin, Ethereum, Ripple, all those things are pretty much acting the same way. And we have the damn same thing happening all over the asset classes, even though the conventional markets, even though the forex market, the bond market, the stock market, the stock themselves are really acting weird actually right now. We've got nothing that makes sense. It's just that we're trying to do, no matter how long this has been lasting, we're just doing the opposite of what retail traders are doing. They're trying to sell, then let's fucking buy. No matter how long this has been doing stupid, we'll still keep on doing as long as necessary, because all we have to trade right now is just the profit, the tiny trader stop losses, the retail trader stop losses. These are the only one who are trading right now. And as I said, I generally take that picture of a casino to make you guys understand what's at play into a market, into a global market like we have. It's like the biggest ever casino, but not the casino you have down the street. Really consider it like a big Las Vegas casino. Lots of people in there. You're thinking that you're individuals in a big mass and that you don't have a name, don't have a face. But there's cameras all over it, and as long as you don't stand out of the crowd, no one take care of you. But if you do stand out, you're basically going to be a target. It really is that simple. So as long as you stay low profile out there, I mean, in trading low volumes, either gaining a bit or losing a bit, you're not going to flash red lights. You're just going to be one among others, and you're just going to be somebody who gets into the casino, plays. There are some gainers, some losers, but more people are losing when they're getting out of the casino. They just lost their money out there. They're just going to be poorer when they get out than they were when they got in. And that's how it goes. It's exactly the same into trading in general. Most people are losing money out there. We know that for sure. The numbers are public right now. 75% at least of retail traders are losing money in the market. So it's just like a casino. You get in there and you have more odds to lose money. Obviously, some guys will get richer and exit this with luck. But just this is luck. I mean, you've been pressing buttons and you basically got the jackpot. But the odds for you to pick up that jackpot were just the exact same of the neighbors you were sitting next to, which basically pushed the same button but had less luck than you did. Okay, so it's basically it. Most of the retail gainers into trading, unexperienced retail traders, are basically gainers will do it with luck. Losers would just do it because they have a negative statistical advantage, which means the more they play, the more they lose, and obviously the more leverage they use, the faster the account will just go away. So it's things I've been telling you for months. And then, I mean, you've got the automated machines, which is full of light. What you will always see in front of the casinos, the first thing you'll see when you enter a casino, the cash machines, and then the big lighty machines, the jackpots, the things like. The first thing you'll see in a casino is the worst thing you should put yourself into. So just to set things straight, why we will always have to see the poker tables, the blackjack tables. Further into the casino is because this is where you got chances, you got odds to gain, and I myself consider the thing I'm doing in here in trading like cheating at a blackjack table. It's not cheating. I mean, I'm counting cards. It's just like that. I'm nothing close to a genius mathematician. So it's nothing compared to this. It's just that, just like somebody who's counting down the cards into blackjack deck is using what I use, which is a statistical advantage to gain money more than you will lose the more you play. Which means it's just the exact same damn job. If you do this, you're not certain that you're gonna gain. When you play versus the house can win. No problem than that. The bank can take it. That's normal. They can take it 1, 2, 3, 4 times in a row, but normally the more you play, the more odds you'll have to get the gains. And obviously when you got enough gains, you just get the damn hell out, because if you take too much money, you're going to flash the red lights, you're going to be picked up as a counter, and it's not going to be pretty for you afterwards. So this is just the exact same thing in the market. And I'm using that damn exact same strategy in here. I'm taking the money I can take, not flashing the red lights, meaning I can take some money today, but if I was greedy enough to think that I can multiply this by 10 to 20 times, obviously I'll flash some red lights, I'll be spotted by some algorithms that just fish me out to sea. Pretty damn easy, because they've got unlimited amount of money, they've got stronger forces than I do, so I'm not fighting stronger than I am. It's just how it is. Sometimes I'm sitting at a poker table. When I get to the poker table, I see someone that is really weak. I'm going to sit at the table and take the money out of the guy, which is the psychological pattern I'm using. When I see some psychological emotional trading in the market, I get to the poker table and I take the money as fast as I can, and whenever I got the money, I just get the hell out. Once again, I don't want to play with smarter people than I am and better players than I am. It's just when I see someone weaker than me, I'll get there and take the damn money, if I can do it. It's just how I see things. I'm the casino, but I'm not there to enjoy myself, to play luck. I'm just here to play statistical advantage, psychological advantage, and taking the damn money and getting out and getting in again the day right after. I'm here each and every day trying to take my the spare amount of money I can take, not being too greedy to be stupid enough to just lose it entirely in the end. And I just do it each and every day, each and every 300 days, a year that we have tradings. And it's not 300 days a year, it's more like a 250 days of trading days a year, not counting some other things. But anyway, this is how you should put yourself into the mindset. Whenever you got into the casino the first time, you probably got to the machines. This is where you shouldn't get to, because algorithms will just be there to take the money slowly but steady. They're going to let you win first, and then they're going to take it out. It's just those machines are pretty damn programmed to do it that way, to let you win first, so you get accommodated to it. You're going to like the feeling of gaining, and then the machine is going to make you lose bite by bite and slowly grinding you down, so you don't see this coming, but you're just going to lose the money. The more you play, the more you lose. It really is like that. So don't play the machines. Not how it goes. It's not how you should play it. And more likely the way you should do it is to stay out of this. You can do the scalper thing, which is just basically like the scalpers into the machines. There are scalpers into casinos. They're just watching for traders into the machines that have been losing a lot, and they will just get right after you because you've been losing a lot. So obviously at some point the machine has to surrender the gains somehow. So they will play right after you because you've been losing too much. So they will just be there to scalp the money. But this is not something I do anymore. I've been doing in the past. I'm not doing it anymore. Right now I'm more like trading at blackjack tables and poker tables when I see opportunities. But once again, just like in a real casino, big casino, you've got the back doors, you got the VIP clubs, in where you got the big poker table, which you cannot even imagine sitting out to. They are trading huge amounts of money into dark corners that you cannot get yourself into. So you don't know what's at play right here. You just know a lot of money is playing. It's just what we call the dark pools, the things like that. This is where the smart money is really making the big trades, making the big deals. This is where the big game is at play. This is where billions are exchanged. But you don't have access to this. So don't think that you can understand that. You're never going to be able to, because you can just imagine what's at play out there. But this is just imagination. You never have to. You'll never have your seat out there. And you don't want to, once again. I don't want to be among the billion players. All I care about is taking the money I can to live to afford myself a decent living. And that's it. I'm taking my shares and I'm out. That's all I think about. And this is obviously what you should do right now. So the problem is that at the moment, I'm kind of in a market in which it's like the blackjack table doesn't have that much players, so I'm hardly being able to count down the cards. It's like I was playing face to face to the bank, and I have far lesser odds to gain. Still, I have the statistical advantage, but the bank has much better odds right now. The fewer the players, I mean, a card counter in blackjack knows that you need to have a full table to play. This is how it goes, because the more cards will be drawn, the better you can count and the better odds you'll have. If you just don't play that game on a single face-to-face with the bank, but that's basically what I'm doing in the summer. I'm playing with far lesser odds to get the money, which means this is why I've been a lot more stop-loss recently, lacking the scenarios, been hunted down like a beast, and whenever I enter the trade, I very rarely have the best price right now during the summer. It's been going on for a few months right now. And this is just the reason for it. It's just because the other blackjack players are now at the table. All we have is retail traders playing the machines, and I'm no scalping, which means I do whatever I can to survive out there in the meantime, waiting for the smart money to get back in. And get back at the poker tables, at the blackjack table, in which I can figure out to play something I can make money out there with my strategy. Doesn't mean I'll be losing. It's just that the odds I have to win right now are pretty much narrowed during the summer period. So regarding this, I have to do it. This is my job. I have to work out on a day-to-day basis. I just can't afford to take a 4-month vacation. Basically, first, because I'm going to be fucking annoyed not trading. I like that. It's my job. And like everyone working out there, it's not necessarily a problem to me. This is kind of an occupation at some point. I mean, I don't necessarily know what to do with my time. Most of my friends are working out there, so they don't have free times for 4 months to go hang out with me. So most of the time I just have to work because I've got nothing else to do. And that's basically it. That's what's happening right now. And the only rational decision you could make out there is just simply lowering the leverages. I mean, you should have seen this. For those who've been following me for months right now, who've been enjoying February and the earlier stages of that year with me, you might have seen that since May, lots of scenarios have been going not very well. I've been a lot more stop loss, being wrong, right? I mean, the odds were less in my favor. Yet, I've been applying the same strategy all along. And I don't change my strategy. I won't change that. It's working. It's just it's working less better right now. And I know it, and it's happening every damn fucking year, and I'll just do it as I should do, meaning I'm just lowering the leverages. I know I have less odds to make money, I'm just taking fewer risks, okay? And so should you. If you're thinking right now that the market is about to be hugely volatile, you can make huge amount of money, think straight. If you compare this to casino behavior, what basically are you doing right now? You're singing in front of the big machine who has the biggest jackpot flashing lights, and you're thinking that you're going to get the jackpot. Really, is it? Odds for you to get the jackpots? Nearly nothing, or 0% chances for you to get the jackpot. Obviously, some lucky guys will make the call, will be there saying, okay, I'm selling right now, I'm buying right now, I'm going to catch the top or the bottom, and they're going to take jackpot because they've been using leverage. But once again, they've been taking huge amount of risks, and the probabilities for the same person to take a second jackpot in a row is nearly close to zero, even though it remains probabilities, which means the guy can still do it. And you've got some history of guys into casinos who've been becoming billionaires. When they entered, they took multiple jackpots one by one and got out. I mean, those guys are pretty damn fucking lucky, but that's all they are. I mean, they are not good casino guys. They're just got in, got billionaires, and got the fuck out. That really is what the story is about. And of course, this is big stories you're gonna hear. Guys who went there, got billionaire, bought themselves some fucking Lambos, mansions and things like that. This is not happening to nearly anyone but just a few lucky guys out there. And generally this is just commercials. Those guys who happens out there just are comedians. I mean, they're actors. do you really think the guys are so stupid? Most of the winners you see out there are not necessarily winners. They're just paid guys to make you think they are winners when they're not. I mean, most of the guys you've been seeing into Lambos and mansions, they were paid to make you believe it that way. Most of them weren't even billionaires. If you think it that way, you will think it the way it is actually, and the way the world works out there. Stupid money is giving the money to smart money, and that's always been the case, and it always will be. The smarter the decisions you will take, with statistical advantage, the more odds you'll get to make money. The dumber the decision you take, the more dreams you try to catch, the more odds you'll have to lose the damn money in the end. That's how it is. So once again, you do play as much as you want, but be aware that right now in the summer is the moment where smart traders are making either nothing or very tiny gains or even losses like I do. I'm currently negative right now in the summer, which means if I spare the long-term trades like AUDNZD, EURJPYs and things I have in the background, if I take those trades away, all the trades I've been taking recently have been ending into more losses than gains. So I'm negative into the summer, even though the account is positive right now because of growth, long-term profits that will pass out and pass away that summer area. But despite that, the trades I've been making into the Nasdaq and things like that, into the gold, I've been taking losses out of those trades. Speculative tiny losses because I've been narrowing the leverages during the summertime, but yet it remains losses, which means I've been playing to lose money myself in there. And I'm a professional, so if professionals are surrendering some tiny amounts of money, how the hell do you think that you retail traders, beginners and noob traders can make yourself at there a nice fucking profit? So think rational, because this is how you should put yourself into. Right now is not the timing to make huge amount of money, more likely the timing to lose huge amounts of money or losing it bite by bite. So trade smart, narrow the leverage, try to get yourself into the mental positions that you need to learn and that you have to make mistakes to learn it the hard way. But once again, You are the only one who can choose how much you want to lose to get to learn from your mistakes. So leverage divided by 2, and this is the only rational decision you can take right now if you absolutely want to trade, knowing that the best is just not to get into the casino at the moment and just waiting for the smart money to get back in, to get yourself out of the trading, out of the machines, and getting into blackjack playing. Doesn't mean you're going to be the best of the card counters at the beginning. It is something that you have to learn through time, and it requires experience to master this, but you can try it that way. I mean, it's better for you if you try to count the cards at a poker at a blackjack table, or trying to get into sitting at a poker table rather than getting into the machines. Machines, you're obviously going to lose unless you're lucky. You have some odds to make money out of a blackjack table, and better odds as well making it at a poker table. But really have yourself putting your mindset into what will you do if you would like to, if your job was to get into a casino each and every day from 8 a.m. to 8 p.m., what will you do? Would you just hang yourself into the washing machines and waiting to get your money flushed out bite by bite, or act smart and get where you have statistical advantage? So anyway, that was today educational content. Basically, I could lose my time making you a review of what side play right now, but just to be really straight in here, it's just the money will get on the opposite side of what you're doing, no matter what you're doing, no matter how smart your decisions are. All you can do is just put your stop losses further away, not to get catched up too, because the market will just try to take them down. For a pure and simple reason, these algorithms are not there necessarily to take you down, but whenever you do trade, you follow a simple strategy that is basically like it. What people are teaching you to do and what you should obviously do is not something that you need to discuss out there. Yeah, okay, whenever you take a trade, I myself always tell you to do this. I mean, let me just make the line a little bit thicker, okay? So let me be clear in here. I tell you to do this. Whenever you trade, consider this a scale, okay? It's a risk scaling, okay? This is where you want to take your profits. This is where you're going to get the stop loss, when you are going to stop the trade because it went too far on the opposite side. And I always teach you guys that taking risks is moving that cursor to the downside, which means the more risks you take, the more you get to the bigger gains for a shorter loss. But obviously, this will obviously imply that the stop loss will be closer from the enterprise, so easier reachable too by automated strategy. And basically right now that's all the players. You've got just retail traders, their stop losses, they're taking profits, and the market makers algorithms out there whose goal is just to get to liquidity boundaries and execute orders and get to the closer set of orders. So now if you think it that way, you're going to get to understand why you're losing more into summer instead of gaining money. Is the fact that, think it that way, the market maker is not necessarily there to make you a loser. All it cares about is just to get where the liquidity is. It's just the liquidity provider. It's the one that is making the price moves between A point to B point, because what happens in between is generally not interesting. So the market maker will push the price from there to get to liquidity areas where there are orders to execute. But the market maker doesn't really care about what kind of orders this is. If this is your stop order to stop loss, or this is your limit order to take gains, either way, for that algorithm, this is an order. And an order is better when it's executed. So the goal for market makers is to execute as many orders as possible. Now think it that way. When you're applying those kind of strategies, okay, when you are buying, for example, you're putting a stop loss at distance 1 to get a distance 2 of gain. So you're risking 1 to get 2, which is generally what the traders are doing. Even traders are using some things like that. They're trading when they have odds to gain 1 to lose 1. To gain 2, and they're risking 1. So whenever you think it that way, now think market maker algorithm. When you got yourself in here buying the market, you instantly added to the market to the order book 2 orders, a stop order and a limit order. Okay, so what the market maker will do To them, to it, it's not a human. The market maker is an algorithm, and it's basically okay. That order is pretty damn far. It's going to cost me 3 to 4 billions to get the price out there. Not necessarily billions, as the low volume we're executing right now can be just $3 to $400 million to get ourselves out there in the liquid market. So it's expensive, it's an investment, so I need to have at least 300 millions to execute out there, so I get myself to put the 300 millions, put them out, execute the volume out there, taking the commissions, and then do the opposite side to get to the other liquidity areas that will be right after. But whenever you get yourself into trading in there, you probably bought a support. So you've probably done your job. You've been doing your technical analysis, you've been doing step 1, 2, and 3. No matter how well you've been managing the risks, you've been using this, which means this is a risk to reward ratio. And whenever you're the only ones to trade, which means very low institutional volume, you're just trading against the market maker. And the market maker doesn't necessarily want you to lose, it just wants to go where the money is easy to get. And using that simple thing, you're going to get to the actual point, is the fact that whenever you do trade right now, it's easier for the market maker to get to your stop loss because it's generally cheaper to get there than getting there. On some cases, it will be, if there are many orders like there, right there, it will be too expensive to execute the order book to get to the price, so they will generally get there. On sometimes, this is what happens in a normal market. You've got institutional volume demanding prices out there, which means the market book is heavy. We've got lots of money waiting to get executed in there, which means the market maker will push the price in here. They'll basically start from here. They'll try to execute as low as they can, and whenever they have not enough money, they'll not get to your stop loss, and they'll get there, and they'll get you slowly to the taking profit. This is what I'm generally doing. I'm entering in here, and whenever I'm good enough, I'm taking the entry price right at the bottom, which means it happens. Generally, I can take nice prices, which means I'm going to be executed right at the best prices, and I'll take risks, but manage my risk enough for the stop loss not to get priced out by the market, and the market then is going to my target. But what happens in the summer is the fact that I'm doing this, okay, I'm reducing my risks, which means I'm increasing my stop loss sizing, but generally what the market is doing right now is pretty different. As we don't have the institutional volume demand in here, the market maker sees it that way. He says, okay, it's cost me, it requires $300 million to get there, and approximately the same amount in here. So where do I go? Here, more risks because it's further away. I don't really know. So at an equivalent amount of money, the market maker will just take the closest price to get to. So they'll just get there, and every time they're doing this, they're taking me in, working around my price, executing the volume, and at some point the market maker is pushing the price just to take down my stop losses. And then the market reverses brutally. It generally doesn't take long in here. It's just stop loss hunting. And the market is just doing this. It's getting in there, executing my volume, fucking my stop loss right away, and then brutally reversing, returning to the mean price area in here, making another push, and then reversing. Now, let you understand how it goes. They go there, they fuck my speculative stop loss. They go back. What happens in there is that we've got lots of trend traders that will put stop orders in there to try entering a bearish trend. They'll get executed in here and fucked up as well, which means the market maker is basically fucking up everyone in the market. Trend traders, speculators, whoever the fuck you are, you've got less odds to win right now. You can win, as I said. There's obviously trades that can be winners out there, but we've got less and fewer odds to get winning trades right now during the summer because of this. Okay, so instead of making you a full review today, just basically the market is trying to follow catalyst. I mean, yesterday the Fed was a non-event. We just got to the ECB that is going to be releasing the Fed's the ECB minutes in 6 minutes from now. It's just going to be another non-event. So it's just the market is moving like a dead fucking zombie, moving one step at a time, generally in the same direction, because this is a well-known scenario. As you can see, it really is like a dead zombie. We're going down, okay, ranging, going down again, For what reason? Simply because the retail traders are generally doing what the market, the opposite of what the market is doing. The market is going down, the retail traders are buying. So as they are buying, they're putting a lot more stop orders available for the market maker to take. So you're buying in there, okay, I'm going to take the damn money, ranging a bit, making you buying again, taking another set of stop loss, and then we're going to very, very interesting price for long-term holders. We'll just get in there and put some money out there. And as you can see, low volume in there, meaning low activity, and then whenever we get there, we got volume, we got activity, which means we got long-term traders getting in and holding the market maker from chasing lower stop losses. This is the way you do. And whenever the market does this, okay, the market stops to go down, what are doing the fucking retail traders? This is the time you start to get yourself into shorting. So the market is obviously wrong-footing you one time. So the market is just doing the opposite of what you're doing. No matter how smart you think you're thinking right now, the more you think, the easier it will be for the market to do just the opposite. Simply because most of the time, you'll just think as the general thinking will as well. Which is what I've been telling you right now. If you want to be smart, just do the opposite of what the masses are doing. And you'll be fine. The problem is, why, then the question you might be wondering right now is that, okay, S&P 500 is rising, retail traders are trying to sell it, so why the fuck are you trying to sell it as well, Phil? The answer is pretty damn simple, because we're looking very damn fucking interesting long-term prices of SPX. This is the only reason why I've been selling, because I think, and I thought, that regarding the volume we had right there, long-term traders were executing volume even though we were in the summer. And I think I'm still right, and I think this is a fucking big issue. The fact that we're having volume near damn fucking market tops is nothing close to a good sign for a market. It would be a good sign if we had tiny volumes in the SPX, which is not the case. The higher we get, the bigger the volume is, and this is a concern. This leads me to believe that we're being in a fucking damn range, and that the people thinking that we're going higher, as we probably don't. So the problem is, I'd rather like to be wrong a couple times in a row, but I want to be in the game if I'm right in the end. And I think that right now, summer timing or whatever this is, the volume we have in the SPX is suggesting we're having some kind of troubles ahead. Because this is not normal. The bigger volume we have in here is not fitting the scenario. We should have picking down volume, showing some retail traders activity only, and then this will be the game of retail traders fighting robots, and obviously robots taking the advantage, just like I said. But what's happening in the SPX? Nothing close to this. Big fucking danger out there. This is the only reason why I keep on trying to short the US, and this is, even though I can be proven wrong a few times in a row after being right, I keep on playing that damn fucking US market, because it can collapse at any day without clues, without telling anyone before doing it. Can very well be there in 2 weeks, and everyone will be there, oh fuck, what the hell happened, what did Trump say? We don't even need Trump to say something. It's just right now the liquidity is a big fucking huge problem. We've got volume below damn fucking long-term resistances, and that's not a good sign. That's not even to say the worst sign ever. It means the smart money is playing out there. It's not just dumb money versus market makers. We have smart money playing out there, and believe me, when they're trading high pricings, it's generally not because they're buying, but more likely because they're releasing the trades, they're selling, and whenever the smart money is selling, not a good sign when we are 8 years into a growth market. Okay? So those reasons I've been really clear about them. For a long time ago, I can be proven wrong for a couple months. I mean, the whole summer was just a mess. But I know I will be right at some point, and I know it's not a matter of years. It's not going to last till 2019, 2020. It's not going to be that long. It's just going to take an additional 1 to 2 quarters to fuck me up. But at some point, I'm probably going to be right, because what we have in front of us is not normal. It's more worrying than it should be blue skies and unicorns trading like they're trying to sell you out there in Wall Street. So, that being said, we're going to terminate in here today. I'm going to take your questions and see how it goes. So we're going to take the latest market forecast and see if you guys let me some questions. Not anything, so that's great. So we'll see how it goes. As I said, think smart and take that casino comparison and make yourself a smart way into that casino if you want to absolutely get in, knowing that right now the best choice is damn fucking doing nothing and staying out of this damn casino. Really being patient. As I said, if you were trading cryptocurrencies, we have decent prices on some of those, like Ethereum, Ripple. It's not yet the case for Bitcoins, but you can buy those if you were there to make a damn buy and hold. If you want to take some vacation, some holidays, and not looking at the market, you just damn press the fucking buy button. You make a damn buy and hold, which means no leverage, and you don't put the entire amount of money you have available. But you can just take a first shot at putting 30 to 40% of your capital in there, buying assets that have interesting prices, and just get the hell out of this. You make the long-term call. You don't have to look at the chart, even if the price is divided by 2. You don't sell those fucking coins you bought. It's really a buy and hold. You don't give a shit about what the market is about to do afterwards. But if you absolutely want to trade, it's the only thing you can do. Buy and fucking hold, and don't put the entire money you have out there, because we might have some additional lower prices in the end. But we are already at interesting prices. So if you want to buy, as I said, to me, I'm not telling you what you should do or shouldn't do. So I'm not here to give you advices. All I can tell you is what I do, and you know I've already been buying Ethereums. So if I do buy, and I'm a professional, means that you have the red, you've got the green flag to go in if you want to. But I've been buying only Ethereums and Ripples, which means you don't want to get yourself into buying Bitcoins, because I'm not yet doing it. So you do as you please, once again. But as a professional, I think I will always take more rational decisions than you will, as you are beginners, and that's how it is. You have to learn things I've been learning in the past, and that's what makes me a better trader than you will, simply because I've been learning those things before you. But that doesn't make you obviously a loser. Sometimes I'll be the loser and you'll be the gainer, but in the overall big picture, I'll be the gainer and you'll be the loser. Not necessarily you're going to lose, but I'm going to gain more than you. It's simple as that. The more experienced I am, the more gains I'll make. That's easy to plot, easy to understand. So don't try to fight it. That's how it works. The more you try to fight and think you're smarter than others and that you make huge amounts of money, easy money, I mean, how dumb that decision is. So it really is. If you're thinking dumb, you're obviously going to be among the dumb traders. And if you're among the dumb traders, you have far more odds to lose the money and surrender it to me. Bite, bite, bite. So bye guys, hope you have learned something again today. I'm sorry we're making more educational content right now because simply we have nothing else to do. It's basically the market is uninteresting and we'll try to do as we can. So see you guys tomorrow.